Good morning, everyone. This is Brad Matheny. Today is the 11th of October. This is the Plan Your Trade video for Friday. Happy Friday, everyone. Boy, what a crazy week, so to say, in the markets. We're looking at a daily chart here of the SPY, and we are looking at a breakaway pattern in trending mode today. Notice that we've gone back to bullish trending, explosive, bullish, bullish, bullish. So these are my proprietary SPY cycle patterns, as well as my proprietary daily, weekly biasing system. And these are essentially simple price trending based on moving average, and this is a price measure based on ranging, kind of like average true range, but it's designed to tell you what kind of price action we're seeing. Now, today in the SPY, we had a pretty good move here to the upside on Tuesday and Wednesday. Yesterday's move was fairly narrow, kind of an inside doji bar. And what we're looking at today is an inside breakaway. So yesterday was a carryover in carryover mode, and today is an inside breakaway in trending mode. So we're looking for kind of a move starting in this area, moving up into potentially this 579. Well, let's call it 580 to 582 area. Let me come back down into the 30-minute or the hourly and spread this out. Come back over here and give you guys kind of an idea of where we're at with this. So this was yesterday's activity. We didn't really get a lot of carryover. We basically just built a base here. Today's move could be a lot more explosive to the upside. And what I would suggest is that we would be looking at the potential of some kind of an opening range here in the middle of price, possibly seeing some kind of an explosive move up into the 581 to 582 area, which puts us pretty much right into that area. That'd be a pretty solid upward move overall from where we're at. That'd be about a 1.25% upward trend, probably pretty solid overall. And I think we're going to be looking at an end of week kind of a squeeze rally into this mode. So we'll see how it plays out with news. Of course, news can interrupt things, so we will see. Overall, this week has played out okay. I mean, I was hoping to get more clear. We had a fairly clear, move in early trading. And then we had this carryover mode here that lasted a little bit longer into midday yesterday, indicating a sell here, was indicating a buy over here, trying to catch this trend. Never really showed up yesterday. I mean, I still consider this week a success, but I would have really liked to have seen some better price action. In reality, we had 2 or 3 days that were perfect, and then we had the other 2 days, one of which was yesterday, was not very good. And the other of which was this go flat consolidation day here, which ended up being a big sell off. Um, I consider that a success still, just was a little different, a little bit more aggressive selling than I expected. And that was really because of a bond auction and Fed comments that came out. So we'll see how we play out today. Remember the patterns. If you've been following me long enough, I've been doing this for about 5.5 months maybe, and the patterns have been very accurate. I'd say they're about 70-80% accurate overall, but we do go through these periods where price reacts differently than what the patterns suggest. So let's go ahead and take a look at gold, and then we'll bounce around a little bit. A couple of things I wanted to show you here. So let me try to, oops, that's what I want to show you. So here's the gold pattern. And the gold patterns indicate we're going to have a top resistance pattern today. This is a Friday. The top resistance pattern essentially and we don't have the data here. We don't have the data here. Where is my markers? Probably up above here. Yeah, there they are. So a top resistance pattern is similar to this. Let me draw it for you. This is what I expect to see happen. So gold's had a nice little rally over the last 24 hours. Okay, beautiful to see. I had drawn this chart indicating that we were moving upward. This was my other gold chart that I showed you yesterday, indicating we're moving up to the 2670 to 2685 area, that we'd broken away from this resistance. We had set up a nice solid upward trending. We may get a bit of a pullback here, is what I suggested. I think we've had that pullback right back down to the 382 level right here. So we could continue to move a bit lower, but more than likely, we're going to see what's called the top resistance pattern. So the top resistance pattern is a move up to a peak, probably breaking above the 2670 area, and then rolling into some consolidation into the end of the day. Now, the consolidation and downward trend may be a little bit more aggressive, but it's generally a rally phase in early trading leading to a rolling downward trend near the end of the day. And that's what I would draw here. I would draw a rally phase into the day, 2680, maybe 2690, and then rolling into some consolidation at the end of the day. And that's what I expect for gold today. And that's going to put us into a potential from where we're at right now of about a 1% rally. That'd be about a $28 move. So we're up 18 bucks already, and we might see another 20, 28 bucks to the upside. That's going to put us at about 38 bucks rally phase since the end of trading yesterday. So pretty good move overall. Now, we are looking at, again, if we move into next week, we have a blank top, flat down, harami inside, temporary bottom, and then we go into a gap potential into the weekend. So this topping pattern, flat, harami, and temporary bottom, would suggest that we're going to see this type of price action in gold next week, meaning that we are going to see potentially a carryover. Let me try to get this set up here. Potentially a carryover rally a little bit into Monday. And then we have the flat down rotation consolidating back into this channel, temporary bottom, setting up, and then some sort of a rally, maybe up into this 2740 area again. So we're going to go through this type of consolidation right in this area. And that consolidation is because of this rotational pattern here. Top, flat down, harami. Right there tells us that on the 15th, going into the 16th, we're going to reach a peak. We're going to be moving into consolidation on the 16th, 17th. Then we get into a temporary bottom, which is very similar to what we had yesterday. And a temporary bottom is setting up some deep resistance or support and then rolling into an uptrend. And you can see how that played out yesterday pretty cleanly on that deep low bottom, rolling into an uptrend. So it's after that temporary bottom over here that we should set up a nice roll to the upside. So in reality, folks, we've got, today and Monday, maybe Tuesday of next week. And that's going to put us out into this area, the 15th. You should be looking to curtail your trading here temporarily around the 15th, looking to then potentially get back into trading around Thursday, late Wednesday, Thursday, the 16th and the 17th. We have the buy opportunity here, and we have the weekend opportunity here. So this is where you want to try to kind of curtail your long trades, sit this out. This is an area here where we don't really want to be in, and you want to be looking to buy right back over here around this temporary bottom pattern, which is going to set up either, down here, either very late on the 17th or early on the 18th. So make sure I got this right. 16th, 17th, 18th. So yeah, there's your bottom pattern. That's the 17th going into the 18th. So I might have to extend that a bit. That would be, let me do this. So we're coming up here. We're rolling, consolidating, moving into the temporary bottom pattern and rolling up out of it. So there's a better example of this. Find that. Same color. And so there's a better example of the rolling pattern and the temporary bottom that's going to set up, giving us the exit. And you pretty much do want to be very cautious of this consolidation period here. There's my cat whining for food in the background. Gotta love having a cat. They'll definitely let you know when they're hungry. So, okay, so there's our gold. Now, I wanted to show you a couple things. So, with regard to the market, I had a lot of questions from subscribers the other day, and a lot of you guys, you see the cycle patterns and you see my charts, and you don't really see some of the other things that go on in the background. Okay, so this is my main folder for storing all of the information I share with clients, members, what have you, and even you guys. I mean, you guys are what I call my free list. So, long and short of it, I want you to understand that the research that I do every weekend is extensive. It's not just going over these charts and looking at patterns like I do in a 15 or 20-minute video with you guys in the morning. These things are pretty much built on their own. They run on their own. They tell me what to do every day. But I have modeling systems like this. This is my adaptive learning modeling system. It's a predictive learning system. And what I can do is I can ask it, as price is trending over the last 10 or 15 bars, what's going to happen in the future. And this is a mirror of the daily SPY chart. This pink line is what I consider the most likely outcome. And what I do is I follow these clusters of lines. Yellow lines represent bullish closes, higher closes. Blue lines represent lower closes. And white lines represent near equal closes. So what we're seeing here on the SPY is a likely move up into the 585, 590 area, maybe by over the next 1, 2, 3, 4, 5, 6, 7, roughly 8 days, up into a topping pattern, and then potentially rolling down into this area. This is the election. So I would say this would be like the 20th to 24th, just like I've been saying, rolling into a downward trend. And then it looks like we get this clustering. You see how we get very little support up here. We may roll a little bit here, but right before the election, it looks like we break down maybe into this 560, 570 area, building support and then rolling out. Now, this is a daily chart, okay? So now we come back here. This is a weekly chart. Weekly data is a little bit more forward looking. We can see months out into the future potentially. And what we're seeing here is, look, we're seeing this peak level up in the 590, just below 600 area. Then we see almost a very sharp drop, potential rally back up into this area. And we really have zones here. If I were to try to draw this, we have zones right in this area. We have a zone right in this area, and then we have a weaker zone right in this area. Now, if I were to rank them, this would be the most likely zoning. This is the secondary most likely, and this is the third or the least likely zoning. Now, this move, this shift from here down into this clustering here at around 550, 560, 570 looks very clear, right at or near the election. I would say within 2 to 3 weeks of the election, we're going to be seeing a move from 580, 590 down into the 560, 550 area on the SPY, a fairly strong pullback. And then we're going to be moving into a recovery phase. And I've drawn this little pink line in here. I'll zoom in a little bit. You can see this little pink line shows an aggressive pullback before the election, recovering back out. This darker pink or magenta color line shows a later rotation right before the election, literally 1 to 2 weeks before the election, collapsing through the election, breaking through this support area and moving down into this 550, 560 area, building support, and then trying to make the shift back up into this mode near the end of the year. And I believe these are very highly likely outcomes using my predictive modeling. Now, here's another one that shows the raw predictive modeling, a daily SPY chart, and this is just over these last couple of days back over here. Tell me what's going to happen with the highest probability of an outcome. We start getting those breakdown patterns over here. So right now, if you just look at what happened in late September, early October, it shows that the upside bias for the SPY is to push up into the 580, 585, maybe up to 590 area, and then consolidate out here near the middle end of October. That would be like the 19th, 20th, 21st, consolidating right over in this area, 580, 585. Now, if we look at my Fibonacci modeling system, this is SPY 30-minute. We've already reached a fairly high level. We're building support right here at, call it 574.80. We have another support level here at 575, call it 20. And then we have another support level here at 575, call it 575. I'd have to take a quick look, but it's right around 90, 80, 90. 95, just around 576. And then we have a resistance area right here at 577. So breaking above these levels, this is Fibonacci price modeling. Now we are also above this last bullish trigger, and we are just below this last bearish trigger. So how do we read this? Until we get above this 576, call it 90 area, 95 area, we do have a chance of seeing this 572 area come back into play, this lower zone here. So again, we need to get above these levels on a breakout, and that's what I believe is going to happen today. And we will go from there. And then the full spectrum modeling system, which is brand new. This is another adaptive learning system, a different type of learning. You can see here the NASDAQ is still bullish in a trend, attempting to reach the 20,672 and 21,110. Currently, the NASDAQ is at 20,215. So it's basically trading right down in this area, consolidating within these ranges. Now, these are the projected ranges. Okay, so you're talking about a 5-day upper range here, a 5-day lower range here on average, and a 15-day upper range here, and a 15-day lower range here. So it's really showing us, again, we're in bullish trending, and we are likely going to attempt to reach these average upper levels, these bluish green levels here. And then lastly, we're going to go to the daily SPY. We're in bullish trending. We're talking about 581 to 585. You can see the upper levels right up here. This is your 5-day high low average. This is your 15-day high low average. So we're looking at price staying in this range and melting upward into the 580, 585 area on the SPY. So now, look at this analysis. This is just part of the extra analysis I do. And then come back over here. Daily, going to 580, 585 in the next 4 or 5 days, maybe 6 days. Hey, perfect. It aligns perfectly right with this area. Hey, look, SPY weekly, going up into the 580, 585 over the next 4 or 5 days, consolidating potentially. This is weekly. So that's right up in this area. moving into consolidation before the election. Aligns very, very well. And again, same thing here, moving up to 580, 585 over the next 10 to 15 days. That's call it 1 week to 3 weeks. And that moves us very clearly out here into the end of the right before the election at around 585, 590, potentially topping and rolling downwards. So using this predictive analysis, I'm able to actually see kind of into the future. It's not 100% foolproof, but it does work. Okay, so let's go back to the data here. We've gone over gold. Let's take a look at QQQ. I just showed you what would happen with QQQ. We are again looking at another type of a rally mode here. I don't want to run out of time. I just want you to know that there's a lot more that goes into this than just looking at my cycle patterns. So we are looking at, again, another breakaway, inside breakaway. I'm probably going to move up into this area. We're looking for a follow through that puts us at 498, maybe up into 500. Pretty solid rally phase. And then lastly, we are going to go to silver. Silver should make a pretty good move, given the move that I expect to see in gold. You can see here that silver's already had a nice little rally. So we're really looking for silver to get up here to 33 again. We're at 31.35. We are consolidating here. We've broken out of this apexing pattern, just like I suggested. And if you can't see it, we are now starting a moderate apexing pattern here. Okay, we are just flagging away. And again, I could, if I wanted to, come in here and say, look, we have a new excess phase peak pattern, which is valid. Okay, that is a valid pattern. I would expect that the excess phase peak pattern would roll to the upside, clearing the way for a bigger, broader upside move. And that is going to be in the view of breaking this upper level in the terms of a rally phase and pushing up even higher. Now, where I think we're going to end up today, I think we're going to probably end up somewhere over in this $31.75 to $32 area in silver if we see a good solid breakaway with gold. Okay, and then lastly, let's come over here to Bitcoin and look at this nice recovery bounce. I mean, first off, look what happens overnight, I guess, because I don't remember seeing this last night when I went to bed. But granted, I live New York hours, so I was probably in bed by 8:30 last night. Pretty solid recovery. So we're back up into this resistance area. We may find some resistance here. Very deep low. I mean, look at this low. Remember, I told you guys yesterday, that and over the last week that we're really kind of targeting this area and we may move sideways. This sets up a very broad range. The establishment of this low, moving into a pullback. I'm going to just get rid of some of these because we don't need them. I want to highlight what's most important right now. What is most important right now is that can stay, that can stay, that can stay, that can go away, that can go away, and this can go away. Okay, what's most important right now is to understand that we've moved into an excess phase peak pattern. So we need to kind of look at this from this peak up here, coming down into, and I'm gonna draw it down to here into this flagging, moving down into the basing level across here, which is where we had the consolidation, breaking down in an ABC pattern to potentially an ultimate low. So now we have this ultimate low. Okay. Now we end up seeing an inverted pattern, which is going to flag at some point. It's going to turn around and flag. And we need to be aware that that flagging downward is going to happen. And what this is going to be is this is going to be, it looks like a fairly wide range. I would expect flagging to start any second, any minute. We've reached this double top. This is clear. If we get above this double top, okay, great. We're going to possibly move up into this area here. So I'm going to highlight this so you can see that this is the next real range off of that high that we can run to. If we clear this high, it's going to probably want to run to this high, 62,500. But right now, guys, you got a very clear double top. If we cannot get above this 61,250 area, we're going to move into this flagging. And this flagging is going to continue to move downward through the excess phase peak pattern down into this area, and eventually is either going to do one of two things. Okay. Eventually, it's either going to break down to a new low, or it's going to execute the second, or what would be called the third phase of the excess phase peak pattern, which would be to break away from flagging, rally to a new high, and then consolidate before rallying potentially to the ultimate high, which could be much higher. So we've got to be aware that where we're at with this ultimate low down here, the end of this pattern, moving into this contractionary upward trend is really an excess phase peak pattern, which will shift into flagging. So be aware that the next move is this right here, some kind of downward flagging, maybe to here, maybe to here, maybe all the way down into here. Who knows? But it is a rollover into downward flagging. Okay, I'm going to leave you guys there. We should expect a rollover. We really should expect either a rollover downward in Bitcoin or a break up pattern here. My bet is we've got about an 80% chance of a breakdown pattern setting up after this big recovery. I mean, we've seen a 59,000 up to 60, almost 1,000. That's a 20 some $100 move. I think we're going to see a rollover fairly quickly. All right, guys, that's it. Get some. It's Friday. Have a good weekend.